How much money to get started in real estate? That's a good question because more and more people are looking at real estate to pursue, whether on the side or doing it full time so they can walk away from their job. But the startup costs, the capital, how much do you need to actually get started? I think you'll be surprised of how little it actually is. And I'll walk you through a few different options as well, of which one of them is a little under the radar. Not a lot of people know about it, and that's a shame because it is so profitable. You ready? Let's go. I'm going to quickly cover why real estate is something that you probably should be considering. And then I'm going to give you 3 different options of how to get started with their corresponding costs so that you can pick the best one for yourself. And then if you decide that you want some more help, at the end, I'll show you how to get it. Now, there are many reasons to get involved in real estate, from income to portfolio diversification. During times of volatility in the stocks and the bond markets, investors will turn to hard assets like real estate. In the past decade, as another example, purchasing second homes and turning those into short-term rentals has really grown in popularity for investors. And there are several ways to get started in real estate that don't require a whole lot of money. And I'm going to give you 3 examples and their costs. Now, the cheapest one is a REIT, a real estate investment trust. And you can get started inside of a REIT from anywhere to $1,000 to $5,000. You don't need a whole lot of money to get started there. Now, REITs were first created in the 1960s. And they were created to allow investors to participate in commercial real estate. The real estate investment trust is one of the cheapest options available to add real estate to a portfolio. Now, you don't actually own the real estate though. These are securities and they are traded on the stock market, on Wall Street. These funds, they invest in real estate directly, either through property purchases or through mortgage investments. Many REITs specialize in a particular type of real estate or a specific region. A REIT offers the investor a high dividend, relatively speaking, and a high amount of liquidity in their real estate. Many investors like this type of real estate investment because traditional real estate investments aren't easy to get out of. An exchange-traded REIT absolutely is. It's 100% liquid. Moreover, you can start with a very small amount of cash. Now, if you're in it for the long term, consider a REIT that offers a dividend reinvestment plan. Number 2, moving up the cost ladder, consider a real estate investment group. And this investment participation could be anywhere as low as $2,000 up to $50,000. So for investors seeking to own the actual real estate as opposed to shares of real estate like you do in a real estate investment trust, a REIG, a real estate investment group, might be the right fit for you. So a real estate investment group allows an investor to purchase 1 or 2 units of living space within an apartment or a condo building. The operating company collectively manages all of the units and is responsible for marketing them. In exchange, the operating company takes their share of the operating income, the monthly income. So a real estate investment group, it represents a rather cost-effective way to own the actual real estate itself, all the while taking the management responsibilities off of you, the investor. So like I said, some real estate investment groups can be as little as a $5,000 commitment up to $50,000, not enough to buy a whole property. So what they do is they pool a number of investors to own the property together. The goal for investing in a real estate investment group should be to find one that actually pays you a monthly cash flow, a monthly dividend. Now, before I break down the third way and the money required, if this is starting to get your wheels turning a little bit, click the subscribe button. I post cool videos like this each and every week and you don't want to miss it. Now, number 3, investing in income properties. Typically $100,000 or more is what it's going to take to get involved here. The tried and true way of investing in real estate is also the most expensive way and probably the most labor intensive way too. And we're all familiar with this basic idea. You, the investor, you go in and you buy a property and then you take it over. You might have to do a little bit of repair for the property to get it ready for your tenant. Then you go out and find the tenant. The tenant moves into the property and they give you a monthly fee to occupy that space. The owner now is responsible for paying the mortgages, paying the taxes, and typically taking care of the utilities and the maintenance. Ideally, the rent will cover the costs and maybe over time also provide income or growth or both. Now, depending on the seller or the lender, you may need as much as 20% down. You don't need to come in with the whole $100,000. It's 20% down and maybe some closing costs, and that can get you in. Now, if you decide to purchase a fixer-upper, you might have some construction costs or some rehab costs also. Now, the amount of money that you need to purchase an investment property like this, it can vary and vary greatly. It depends on the type of property you're going to purchase, where it's going to be located, what its condition was going to be, and what type of condition you want it to be in. And the list goes on and on and on. For example, a fixer-upper in Southern California, that might run you $500,000. And that same like property in St. Louis, Missouri might cost you just $100,000. Now, when you own a rental property like this, whether it's a single family house or it's a giant mega apartment complex, you're gonna want some cash reserves for emergency repairs and occupancy gaps. Now, if you like the idea of actually owning the income property and owning the property itself, it might make sense for you to talk to Mercedes. You can get started by downloading her investor packet, her free investor packet at cashflowsavvy.com. And what Mercedes does is she'll go out and find the property for you, she'll fix it up, she'll put the tenant in place, she'll arrange the property management, she'll even arrange the financing for you and just hand it to you on a silver platter as a cash flowing asset. So after you download her free investor package, you'll have the opportunity to pick a time to hop on the phone with her to brainstorm some ideas about what making this type of investment would look like just for you. Go to cashflowsavvy.com. You can take that domain name, type it into the browser, or for your convenience, I'll put it down in the description below for you. All right, that's it for today. Take care. I'll see you soon.